Mr. Bhaskar Rao, who is the Chief Financial Officer and Board Member at Bangalore International Airport Limited. Giving a brief introduction, he is a business finance professional with over 30 plus years of leadership positions across finance, business development, entrepreneurship in India and international organizations, with expertise in corporate finance, investor relations, equity and debt fundraise, project financing, merger and acquisition, transactions, cash flow management, policies and process formulation, etc. He is a board director across a range of businesses such as cargo, luxury hotel, airport city, airport infra services, and duty free. With this, please welcome Mr. Bhaskar with a huge round of applause.
Thank you. Thank you very much. Okay. Let's need to, okay. Thank you very much and good afternoon. And it's my pleasure to be with you sharing my experiences. Topic is risk management, and I don't think there could be a more apt person than me to discuss risk. In a sense, everything that we do, probably in the aviation business or airport, is centered around two very critical risk factors. One is safety, the other is security. And that in a manner translates across the entire organization. And today, I mean, there are newer and newer risks that we continue to face with, and these challenges we try to integrate within our systems and try to overcome it or try to make sure that we are prepared for such risks. Risks are something that may not be avoided, but it's how we mitigate, how we prepare ourselves is what is more important. Probably some of the key risks that we have faced in recent time, which we never anticipated. One we anticipated but did not know that it's going to be so severe, which is basically the cyber security risk that an airport faces. I mean, we get so many pings from across the world who want to enter into our systems, and it's a continuous journey, continuous way of addressing and protecting the airport. And the second is probably one other thing that I'm going to speak today is the risk that was provided by COVID, something that we never anticipated. We never realized that such a big threat or a risk could be posed to the aviation business. It did not happen after 9/11. It did not happen during the financial meltdown of 2008. It did not happen a large airline collapse like 𝗕𝗱𝗄, which was the hub in Bangalore, and that's where we experienced it firsthand. But this was something which just creeped into us and then sort of exploded within our system. And that is where today in hindsight we can analyze where there sort of warnings that we should have heeded to, and also how we managed through this particular risk and how we today are in a position of better preparedness should such a risk arise in a future date. So probably this is what it is. I mean, every business there is risk, and if there is no risk, then there is no business actually. So I would start with that. And as you know, I mean, of course, this is a terminal we built through all this period of risk of last 5 years. We faced a number of risks with the COVID coming in. I mean, the last 5 years have been probably one of the most hectic period for Bangalore Airport. In a way, we have put a new airport within an existing airport. We built a terminal, we built a new runway, built new taxiways, new roads, and I think each one of you would have experienced this in a manner or the other as you have been traveling or not traveling during the COVID period. So this is one project which has taught us a true meaning of risk. A project where risk of us running out of money, risk of us getting delayed because the entire migrant labor moved out. They went back to their villages. We were unsure on whether we would be able to complete on time, whether we would be able to complete within the money that we have, the funding that we have done, or whether it would come in the way that we have envisaged, whether we would have to cut back on certain investments. Probably we did all of that in a little bit way, but we were able to do that. And this, of course, gives you a very good idea of how risk could impact a business, and especially if it is not well process driven, how it could also, probably destroy a business as well. Airports, in a way, are generally business of business. I mean, it's airlines, aircrafts landing and taking off is one of them. We have retail business, we have F&B business operating within our, we have launch, we have duty free, we have the cargo, we have the ground handling, parking, innumerable number of business. And today we are looking at building a airport city. We are also have a fuel farm within our airport, and that it would be a hub of business that would continue to come through the system. So there is a lot of risk which we also import from these various businesses, even if it is not run by us, even if it is run by other concessionaires. So pre-pandemic era was a period of growth, a period where we were going at a 11.3% CAGR. We doubled our capacity, we doubled the traffic. I mean, to give you a perspective, in 2008 when we started the business at the airport, airport was built for 12 million and we were 9 million. By 2018, by 2018 we were 27 million passengers, handling 20, and by 2020 we were handling 33 million passengers. And all of a sudden, it plunged to 8 million. So it gave us every level of risk that was possible, and this in the midst of our probably the largest expansion. This is where COVID really clipped the wings. Traffic fell, traffic dropped down to 15% of our pre-COVID. The air traffic movement to 25%, freight to 5%. Revenues were down 75 to 80%. Increase in COVID-related cost. Most of 80% of the airport costs are fixed. They are not variable with number of passengers flying or not flying. We are, at the end of the day, an infrastructure asset. An infrastructure asset, as you know, has a lot of fixed cost by way of number of people, the interest outgo, the capex that is required for managing the airport. So all of them are, almost 80% is fixed. So there are no reduction in cost as such. So plus the uncertainties, the vaccine uncertainty, the recovery uncertainty, the number of wave uncertainty, corporate travel uncertainty, and even today, we still face that corporate travel uncertainty. There's sort of a revenge travel that's coming, but that's coming more from a vacation perspective. That's coming more from a perspective of individual, but corporates are still slow, and especially Bangalore, which is hugely driven by the IT and technology business. So our risk perspective from an airport perspective, is mostly to around cash flows, around our requirement to manage funds, because an airport infrastructure development happens in lump manner. I mean, we don't increase capacity year on year based upon number of passengers traveling. We have to do lumpy investments. For instance, today, we are back to pre-COVID traffic of almost about 30 million passengers. But the capacity that we have now created can handle up to 55 million passengers. And we know this capacity will get consumed over the next 5 to 6 years. It's not that every year when a 5 million passenger increase happens, that we can increase the size of the terminal, or we can increase the airside facility that we have, etc. So from that perspective, matching, I mean, in banking terms, they call it ALM, but in our case, it is just to match the monies that we have, the debt that we have, with the requirement of capex that needs to come. And we cannot say, I mean, this being one airport, a city, more monopolistic, that we cannot say, no, we do not have capacity, please come tomorrow. It's at the end of the day, it's a requirement of travel that we have to meet, and that's a part of our concession. In addition, we also face what we can call regulatory risk, in addition to all the other risks that I'm talking to you more from a financial perspective, but there are many other risks, including risks of, one of the key risks was retaining employees. In Bangalore Airport, what we did was we retained all our employees, even during the, absolute depth of in the midst of the COVID. But there are partners within us who have let go of employees, and today they are struggling to get in those employees, and that creates a capacity mismatch again. I mean, there are innumerable number of risks that can be foreseen. I mean, if it is a retail or if it's a F&B, getting recruiting is easy. But if it is, let's say, ground handling, if it is, say, cargo business, it's difficult to get qualified, skilled employees to immediately come in. I mean, they would have gone. A lot have also gone. I mean, sort of a risk that today we are facing with, and that's what we are preparing for ourselves, is attrition. And attrition not to any other industry in India, attrition to other airports, not only in India, but in the Middle East. Because they had let go of a lot of people, and today they are growing so phenomenally that they find it easy to get skilled people who are in Indian airports. So definitely the traffic risk, operational risk, capital expansion risk, as I've explained, and the passenger experience risk. I mean, passenger experience risk is one of the biggest risks that we have to face. Both bouquets as well as all sort of complaints or criticisms comes to us regularly over our social media platforms, and that's a risk that we run with the passenger experience that we as an airport can provide to our passengers. So the risk management at BIAL, as I have already mentioned to you, that we've studied and we've learned a lot of lesson in the last 5 years on risk management. COVID has been a big teacher for us, and generally Bangalore Airport is more what you can call conservative in the approach of our risk matrix, and we operate on a low risk appetite, including, for instance, we have a very conservative treasury policy as well. And these are required probably in the type of industry that we operate with. So BIAL's key risk management has been around operational, information risk, legal and regulatory, and financial risks. So we also have a risk review mechanism where we have, basically in an airport, ERM gets stapled with BCM, business continuity, because business continuity is another key feature of an airport. We can't have a stoppage in the airport. It's 24/7, 365 days, and it has to operate. So BCM becomes a very key component as well. So there is a framework within which we have identified core members who work both on the BCM platform as well as the ERM platform, and that review goes through a steering committee and also an audit committee on a regular basis. And we identify what the top risks are, and the last 3 to 4 years, the top risk definitely has been liquidity because of the situation that we were in. Again, the risk could be both from a physical infra perspective, which a lot of these risks are also insurable, and we do make sure that those are insured. Digital infra risk, again, as I mentioned, we have to work on absolutely zero trust sort of a environment where our airport servers, aviation applications, internet networks, database, etc. Could always be susceptible to cyber risk. And these not only come from, they come from all sort of places, enemy nations, dark web, whatever you call it. And that's one of the biggest challenge that our information technology group handles. So I think I have more or less explained to you mainly our cash flow perspective that we have taken. I mean, we have sort of, manage our cash flows as conservatively as possible, even during the period of COVID. We've sort of, we've tried to look at what are the cash conservation that can happen, and that went through almost a ground root level of saving. I mean, we called a program which was called FIT, Financial Improvement Targets, given across, and the key was not only expense, efficiency, but saving money. And one of the way, this was so very popular that every member of our organization worked towards it. One of the key sort of promise that as management we did was, look, we do not want to touch the employee pay, the employee entitlement. That if it is, it will always be on the bottom of the list, and let's address every other way we can find cash during this period. Also, our conservative policies on cash flow has helped us in a sense that, we have our entire capital outlay was well thought through. We had done detailed, analysis of all the capex that we would enter, and we had done a financial closure, and our project cost today, I mean, we are saving almost about 10 to 15% over our project cost. We had, earmarked all the money, both from internal accruals as well as from the lenders. And thankfully, we had put all our equity requirement for the project upfront, and that has really helped us in getting our disbursements from banks. A stalled project at that stage could have been disastrous for us. In addition, we also took a lot of measures at that particular moment of time to manage the risk. I mean, I am more going for the last 2 or 3 years because these are risks which could come once again, and these are learnings that, not only as any other infra player would also adopt. We always try to shore up our cash. I mean, an airport cannot run with a low cash availability. I mean, at an airport like Bangalore Airport, I can't operate less than 150 crores of cash in my bank account, because that's the sort of requirement that could come at any moment of time, not only for operational needs, but for emergency needs and every other sort of requirement of cash that can come on an immediate basis. We did refinancing, we showed up with additional credits, and thankfully today we are back to our healthy situation. Cyber security, I have already explained. I don't think I would want to get more into it, except that we follow a clearly zero trust policy where we verify identity, verify device, verify network, curate access in real time. I mean, it's one of the top priorities that we give within our organization. And the last is the regulatory challenges. I mean, the risk that regulatory gives us. I mean, we are a regulated entity from an economic perspective as well. I mean, we are regulated by a lot more. We are regulated by DGCA. We are regulated by BICAS. We are regulated by AAI. We are also regulated on an economic front by a body called ERA, Airport Economic Regulatory Authority, where our tariffs are determined for a period of 5 years based upon our traffic, our growth, our expenditure, our capital expenditure, etc. And frequently, there would be cash flow mismatches. In a sense that, we would have got a revenue which in times of boom would be more than what we require, and in times of depression would be less than what we require. And that balancing is another key risk that we have to keep on carrying. In addition, like most businesses in the infra space, especially in the PPP space, promises given in concessions are not always carried. It's today's position of the airport finances. It's today's position of the airport revenues and traffic that are seen as against the risk that the investors would have or the promoters would have put in when the airport concession was granted. So, I mean, these are some of the other key risks that we would look at. Sectoral, regulatory. I mean, there's always airlines lose money, so they always get the sort of benefit of doubt by every authority, and airports are generally put into a background saying that although airport charges are not much, they are only about 5 to 6% of airline operating cost. The major is fuel, but still airports get the whatever you call the naughty child sort of approach by the regulators. So these are some of the things that we do face. So these are my experiences of how we manage risk in airport, and I'll be very happy to take any questions that you have. Thank you. Thank you. Yeah.
Thanks a lot, sir. Do we have any questions?
Yeah, that is the question.
So being an airport, you must be housing a lot of regulatory related aspects like customs and their collections, and there are a lot of frauds happening in the customs when people try to violate some of their rules. So how do those actions affect you in terms of finance or operations?
So actually, they don't impact us. In a sense, they are sovereign functions who work independently within their rules. However, what we have done, I mean, from a cargo perspective, etc., is that we have increased the use of digital, aids to improve the efficiency within an cargo. So today, for instance, on an import, the entire customs process takes less than 6 hours. That's a sort of, and it's monitored. It's not only monitored by the customs, it's monitored by the cargo operator, it's monitored by the importer, it's monitored by the airport. So we try to improve efficiency, and as you improve efficiency, what happens, corruption or whatever that happens when people have the power to hold on to things. When they don't have the power, it reduces automatically. And at Bangalore Airport, we have a zero policy as far as any under the table transaction is concerned. We do not do it. We are so very strict about it. Yeah.
Yeah, hi. My question was, see, most of your infra is rented out, right? So your income also would equally, I mean, there would be a predictable income. Well, I completely appreciate the cash flow and the impact that you had, but you would also have a predictable income, isn't it?
So yes and no, in a sense that that's where our regulatory aspect comes in. Our aeronautical assets, which is called regulated asset base, forms almost 90% of the airport infrastructure. Now, regulatory asset base are what are used in the aeronautical use, and against that we get what is called aeronautical revenue, which is your landing, parking, housing fee from the airlines, cargo, concessionaire fee, the UDF that you pay in your air tickets. Now, these are determined based upon a formula by the regulator for a period of 5 years called control periods. So it gives us a pass-through on our cost on a very efficient norm basis, plus gives a return on equity that is remains invested in the RAB. Now what happens is, it takes certain assumptions, like it says over the next 5 years, you've grown by 12% every year. So I will assume that you will go by 12% every year. Your traffic, for instance, over the 5 years is 100 million. And they give me a per passenger yield tariff. Let's say it is 150 rupees. Now, if in a period where the growth is not so much, and air travel growth are linked to the GDP growth of a country, it's a factor on that. If instead of 100 million, it's only 80 million passengers who travel, to that extent I get lesser. But my expenditure really does not go down, as far as the aeronautical is concerned. I do get, from the non-aeronautical revenue, I do get concession fees like
Even the
rental charges, etc.
Rentals, etc., right?
Yeah. So that again, 30% of the gross before expenditure goes to subsidize my aeronautical tariff. So what remains, we actually have some expenditure and the taxation out of that. So it's just management of how you manage both of them, and especially the internal accruals. For instance, at Bangalore Airport, over the last 15, 16 years that we have operated, all the money that has been earned by the airport has been reinvested back into the assets. So the requirement of capital for capex growth is huge.
Hello, hi.
Thank you.
1 second.
Oh, one more question. Oh, sorry.
Firstly, congratulations on the successful completion of the terminal. It's really fantastic.
Thank you.
And it was fabulous.
That is our humble, what you can call, offering to the city of Bangalore.
It is really
it's at the end of the day, city which deserves the airport. Thank you.
In this journey of your funding for this particular capex, huge capex project, in fact, I understand from you the equity you could upfront inform to the vendors or the lenders particularly, and also you could represent to them the requirement of the contribution required from both the promoter side and the bankers. So in that process, you might be using the digitization requirement on the projections of the inflow and outflow. Maybe the digitization requirement with respect to the design view of the building of the terminal is different. It's our operational side.
So
how your digitization helped in this funding requirements?
So, just to give you the 4 pillars of our Terminal 2, the first pillar is that of garden city, terminal in a garden. The second pillar is sustainability, so usage of the resources within what is available in the airport. Third is digital innovation, just to reflect one, the tech industry of the city, as well as airport needs to be digitally innovative and move on. So from that perspective, probably the digital transformation is the biggest transformation that we have gone through over the last 5 years. Now, our airport story starts with a master plan for an airport. So an airport is envisaged over the life of the airport. Now, if there is a 60-year concession, over a period of 60 years, what will be the growth of passenger within the airport? At what stages the capex would come? And what are the capex years in which the capex would have to be put? Now, this can be revised, because when we started the airport, we thought the airport's max capacity by the time the concession ends in 2068 would be 40 million. Today, we have reassessed it at 100 million. So it keeps on changing. Based upon that, we know when a capex journey starts, and for that, we make sure that the internal accruals are held within the organization. And for this, we do all forecasting methodology, and we have business plans, financial models for the entire concession period of the airport. Thank you.
Thank you, sir, for a very interesting, presentation. But my point here was slightly different. I'm a Bangalorean by naturalization. 33 years I've been in Bangalore. But one of the things is always in Bangalore is a passenger experience. It's not limited to airport. It goes beyond airport, right from the time when the passenger gets onto a cab or whatever transportation.
Absolutely.
Now the point is, the multimodal transportation or multimodal, exchange of whatever that is, helps the journey to be much pleasant, is something missing in the whole scheme of things, in my opinion. But
You're right.
I'm hoping things
You're
will
right,
improve,
you're
but
right.
yeah,
I agree with you right away. And I'll tell you what we, from an airport perspective, could do. I mean, we definitely talk to the city planners, the state government. So we are today building a multimodal transport hub in front of T2, which will serve both T1 and T2. Now, the airport taxi and the way the app taxis are arranged, it was first started in Bangalore. That was a thought process that we had. The Vajra buses, the idea was given by Bangalore airport, and that's one of the most profitable one for Bangalore city bus service. The intercity flying bus again is an idea that we have given, which 𝗕𝗏𝗃 has adopted. Today we have over a period of time asked the government for metro, and metro is now a reality, which would be there in another couple of years coming to the airport. We are increasing the number of airport taxis. We are introducing EV-only taxi services shortly from the airport. So access to the city, both from a perspective of road network and from a perspective of transportation, is absolutely essential. In addition, there is this discussion going on for suburban railway through the K ride to come into the airport. So multiple access to the airport is absolutely essential, and that would be a continuing journey and a continuing challenge.
Yeah, one last question. Adding to his question, and this is your, and your future, state of where you would be. On a lighter note, knowing you, would it help me reduce my risk to miss my plane?
Kamali. So that's something which is absolutely not within our control. So the ATC, the air navigation, is managed by AI, and the airline manages the flight schedules. We do all that is required for them to be, coming together. Thank you very much.